Thermax is the next corporate we're going to be speaking with now. The company posted a solid set of second quarter results. Beat across the board. Order book looks strong as well. But let's get a latest update in terms of how third quarter so far is panning out. 2 months, of course, into the third quarter. Ashish Bhandari is Managing Director and Chief Executive Officer of the company, and he's joining us now. Ashish, good to have you with us here. Prashant, this side. Could you give us a sense of whether momentum so far in Q3 in terms of ordering has been as strong as what you saw in the second quarter? And if you can help us with some numbers, that'll be great.
Hey, Prashant, a very, very good morning. The first 2 months of this particular quarter, just like I had mentioned when we finished the previous quarter, continue to be good, no complaints at all. We are seeing a moderation in the overall activity, which was on a tear. Here we were seeing quarter after quarter an increased pipeline, increased orders. That is plateauing now, especially some of the bigger projects in refinery and oil and gas. They are not there anymore. That said, the base activity continues to be extremely strong, and it's continues to be multi-segmented, which is something that we are very, very happy with.
Morning, Rima here. So if you are seeing a moderation in large ticket items in the pipeline, especially in the oil and gas and the refinery segment, what will this do to your growth? Should we also bring down the growth estimates? What's the forecast?
I think on the growth side, we had said our last year was high in some ways. And the last year we had a couple of projects that individually were above 1,000 crores. Those we would have a tough time repeating this year. That said, if we're doing everything we can to get to the range of the order book that we had last year, which was our highest ever by a long shot. So still very, very optimistic, still a lot to do, and replacing bigger, possibly less profitable orders with a lot of relatively smaller, more profitable orders.
Okay. Hi, Mr. Bhandari. Good morning. You've been talking about transitioning from a coal to green solutions focus as well. So give us a sense about the current mix and how do you see this evolving? In the coming year, that's FY23-24. You must be having some targets out there.
Coal overall is less than 15% of our portfolio. Mm-hmm. And even on some of the bigger projects that will come up in the coal side, a couple of supercritical thermal plants that have been announced, Thermax is not going to be focusing on that. Our focus is a lot more on energy transition and energy transition related solutions, biomass, everything to do with biomass, waste to energy, bringing these kinds of solutions in a wider mix of capabilities, which means bringing different solution sets to work well with each other. Earlier in the year, we launched a product which can take 11 different kinds of fuels as part of our heating solution. Each product in that range sells from anywhere between 10 crores and 100 crores. And we have sold in the first 6 months, 7 to 8 projects of this kind, things that we were not doing previously. Our build, own, operate business on biomass continues to do extremely well. Our water business is growing in desalination and a lot of newer areas. Air pollution control, increased norms in terms of pollution management, doing well not only in India but outside. Okay. So it's a tremendous time to be in the energy space. There's just so much going on that we are extremely excited about.
Mr. Bhandari, you briefly spoke in your previous comment about the focus on profitability. That's been languishing in the mid-single digits odd. Do you have a goal, say by FY24, we get back to around that 9 to around 10% in terms of margins? That's something that the street is tracking very, very closely. That would be the ambition, right?
So I would say, think of Thermax as a mix of 3 parts. Yeah, we have a projects business, which is extremely EBITDA, very, very high. Yeah, in the sense that it's always cash generating, very little relative new investments going into it. profitability is relatively lower. It would be 5 to 6%, maybe even 5 to 8%, but it's always cash generating. And so that is one part of Thermax, and it works in a relatively competitive space. But as you can see, Thermax manages its cash very well, and that the origins of that lies in how we manage our projects business. So that is one part of our business. The second part of our business is the products business and product services associated with products. This is where I would say expecting a double-digit EBITDAs and double-digit profitability is completely expected, and that is the aim that we have. Continuing to grow our water business, our chemicals business, a small range of boilers, all of that, and getting to a double-digit profitability. The third part of our business is our solutions business. This is a build, own, operate business. This is where we are investing in terms of owning assets, and the metric to use out here would be more on return on equity and not necessarily on short-term profitability, because this is where we are building our asset book, and we'll continue to build our asset book, continue to put in money for the next foreseeable future, because we see a lot of opportunity out here as well.
That's very helpful, very, very nicely explained. Ashish, you said with regards to coal, etc., you're not going to participate in large projects, etc. Are you actively turning away work because you want to do on the energy transition side, or I mean, is that a...
So we're not, yeah. I think you can call it whichever way you want. We are turning away work in the sense that if we choose not to bid and there are only one or two players in this space,
right,
then that is one choice that we make. But that's it, we are not turning away from coal at all.
But why would you not bid? Are they just purely sort of profitability, business reasons?
So partly profitability and business reasons, partly we have a different look at coal. Okay. Yeah, we want to come at coal from the point of coal gasification. How do you make coal cleaner? How do you work on carbon capture and related capabilities?
Sure.
So very much be involved in coal, but to set up large coal power plants and projects, that is something we are saying no to. But we are still very, very excited and interested in some of what it takes to get coal to become cleaner. Yeah, and that is our focus.
What's your current order book, Ashish?
Sorry, could you repeat that question?
The current order book as of 30th November?
So current order book is still tracking equal to or better than last year. Fourth quarter, I don't think we will be able to keep up. Our fourth quarter was it was bigger than any quarter that we have had in the past, but it had two really big orders as well. But until Q3, we expect to be running ahead of last year.
I've got one final question for you, Mr. Bhandari, before we let you go. You explained the division-wise margins, but on a consolidated basis, should it be the high single digit, 9 to around 10%?
So that's where I would say I don't think we want to look at it on a consolidated basis. Yeah, if a big project shows up, which is cash positive, which makes sense for the company, of course we won't say no. And if that brings the Thermax profitability down a little bit, that's perfectly okay. Yeah, these are very good cash generating projects, and we will take care of each part of the business as it should be taken care of.
All right.
So, and not look at what the consolidated number would be. The mix is the mix. We can focus on each individual parts and our actions there.
Got it. Ashish, it's a pleasure. Thank you very much. And it's always great to hear you explain the business very, very nicely. Appreciate it. Well, 81 points on the Nifty is what we have.